Thank you, everyone who's joining now. We're just going to wait a few minutes as people enter the webinar, and we will get going.
Hey, Philip.
Hi, how are you?
Good. How's it going?
Perfect. Good. Thank you very much. Thank you for joining. I'm just setting up the screen now. Thank
All
you.
good.
Thank you, everyone who's joining. It's been a while since I've done this style of conversation whereby I'm having a Q&A as opposed to presenting something, which I'm very much excited to. I remember the last time I did this, Alan, was in COVID. We used to do this almost weekly. I was at home, relatively bored, and thought it'd be a great idea to engage with the ecosystem. And since then, it's not been done as much, but now is an opportunity for us to kind of build this out. So thank you very much for joining me today. Personally, I'm excited to have you here. For those of you who are joining, obviously I'm CEO and founder of MAGNiTT, and we have Alan Taylor who's here today, who's the managing partner at Endeavor Catalyst. The subject that we're discussing came about, one, because it's something I'm particularly passionate about, and two, I think it's very much core to what it is that Alan does through Endeavor Catalyst. But he was sharing a post that we published on LinkedIn, and then I kind of reached out and said, why is it we're not having the discussion? So the subject is breaking down silos across emerging markets, effectively breaking down the venture silos. And of course, with all of the experience that they have at Endeavor Catalyst, I'm going to thank Lulu for this because she already did the homework for me. 10 years of investment, 300 investments, 37 countries, 51 unicorns, 12 publicly listed companies. But I guess I'll leave Alan later to kind of explain a little bit more around Endeavor Catalyst. But what we really want to delve into today, and the format will be about 40 minutes of back and forth of discussion, and then I want to open it up to all of the audience who'll be joining for any questions that they have, is what is the emerging market opportunity right now? Why are we both particularly excited about it? And what are some of the challenges that we need to be aware of? To tee this up, I'm going to ask a very simple question. MAGNiTT covers what we coin after a period of time as emerging venture markets, which is Africa, the Middle East, Pakistan, Turkey, and Southeast Asia. We were at the MEVCA event, and I think somebody was speaking on stage and called it the Deep South. Other people call it something completely different. So to kind of tee up the conversation, firstly, thank you and welcome for joining us. And what are you coining this non-US European market, if we can so call it?
Sure. Well, thanks for having me. It's fun to be here. I'd love to talk about this stuff. So, thanks for organizing it. There's a lot of different phrases and terms we could use, but maybe we should just call it the future, as in this is where all the world's future growth is coming from. And so if you're really excited about technology investment and backing entrepreneurs and venture as an asset class, I firmly believe, and to be clear, I live in Silicon Valley, so I know a lot about what's happening there. But I really do believe it's in these emerging markets where a lot of the growth is going to come from, and a lot of the best new ideas are going to come from. And that's a fundamental belief Endeavor's had for 25 years, and I've been working on it for about 20. But it really is starting to take shape. And you see it in Southeast Asia, you see it in South Asia, in the Middle East, in Africa. The only other region we work in a lot that you didn't mention is Latin America, but we see a lot of the very same dynamics, right? And so I think it really is the future.
I mean, I don't know if we can do this, but academically, if we talk about venture capital in the US, what are we saying? Probably started around the 1940s, 1950s. Maybe in Europe, it can be considered as the 70s and 80s. When we look at the other geographies, LATAM, MENA, we categorize as around 10 years old. Africa, probably 78 years old. Southeast Asia, from what I gather from my trips to Singapore, are about 17 years old if you look at some of the original Vertex ventures. What's LATAM? Because it's the only one I'm not so familiar with. How old do we call the venture kind of ecosystem in Latin America?
Yeah, it's roughly the same age as Southeast Asia, approximately. And, you can kind of date it back the same way you just did with Vertex. You can date LATAM back to Monashees or some of the very first folks who were practicing this all the way back to kind of 08, 09 era. Kazakh Ventures, one of the most prominent ones in Latin America, launches in 2011. So it's really the last 10 or 12 years that it's taken off. But I'd say the same for Southeast Asia. If it started 17 years ago, it really started to flourish probably 10 or 12 years ago. Phil, one way personally I can map this is when I started my career, venture capital only existed in a few places, right? East and West Coast of the United States, Western Europe, a little bit in Israel, and it had started to take off in China. Then, of course, you had India, boom. Now you've really had Southeast Asia and Latin America, two ecosystems that have a lot in common. And then more broadly, kind of the Middle East, Turkey, Pakistan, and then what's coming in Africa. But I think you can date kind of to when did it start? Like when, I don't know, for Mina, when was Fadi Gandor starting to talk about venture capital?
2000, yeah.
And then when did it really start to take off, right? And that's usually a few years after.
And so, I mean, let's just start with some of the basics, industry-wise, and I hate discussing industries in too much detail, but one thing that's been apparent to me is that in any of these ecosystems, the embracement of technology and the actual investment in venture capital tends to be to disrupt infrastructure. The first point of enablement is to use technology to disrupt infrastructure. And by that, we mean transport and then potentially e-commerce, where transport is the movement of people, e-commerce is the movement of goods. And what I've seen, at least from my perspective, is looking at studying the emerging market space, each of the early disruptors have been specifically in those sectors. Can you kind of categorize the same?
Yeah, I'd say we see it largely the same. Internally within Endeavor, I guess for people listening, we work across about 40 countries, right? So we're looking at a lot of different business models in different places. But we've developed this sort of theory around how technology adoption and therefore what startups are building and what venture investors are investing in really does come in waves. And so Phil, very similar to the way you articulated it, wave one is almost always commerce and consumer, right? And so it's e-commerce and it's the digital infrastructure to support e-commerce, which is typically logistics and payments, right? So that gets built first. The second wave starts to be more sort of logistics to your kind of smart cities of moving things and people around urban areas, and then applying tech to bigger parts of the economy, financial services beyond just payments, healthcare, education, agriculture, food and beverage, etc. That wave typically lasts as long as a decade, right? I'd say that's really the wave we're in now in MENA and a bunch of the markets. And then 10, 12, 15 years in, I think you start to see wave three, which is more true kind of enterprise or SaaS businesses being built. I think we're there now in India. I think we're starting to hit that in Brazil. I think you're seeing a little bit of it in Indonesia, but those from a business model perspective of kind of the waves of tech coming, they're kind of the third wave, right? So I think they're a little bit ahead of MENA and Africa.
And I want to double click on this because it took me a while to try and understand. Naturally, number one, I guess from a playbook perspective, we always talk about the copycat concepts, but in the emerging markets, we're being inspired by what happens in the US or Europe. But these type of models can be applied with relatively simple technology to those particular markets. Flip it on the supply side, investors. And this is the bit that took me a bit to understand, and maybe you can speak to. If you're an investor, there is a clear path, or at least there's a clearer path to exit for those companies than trying to invest in sustainability or ed tech or health tech in a new emerging market. Can you speak on the investor side, how they drive towards those industries as opposed to investing in others? Because I often get asked, why don't we see more investment in other sectors?
Yeah.
But actually history has just proven it's both the demand and the supply, the actual creation of the startups and the capital nascency. That means that they like to stick to models that they can find in other markets.
Yeah, no, good point. So, I mean, we look at this a lot. I actually believe in a similar way to we describe those waves, right? The first few years, 5, 7, 10 years of venture in any market does tend to be more what we would call geographic innovators, right? But those are business models that exist other places being adapted locally. Really only 12, 15, 20 years in, you get kind of true deep innovation on like, globally innovative businesses that can come from anywhere. The other thing to remember, though, in the way we were just describing those timelines, that's kind of where venture starts in terms of dollars in, right? But these are 4 to 7 to 10 to 12-year hold periods on these investments. And so the idea is, when do the exit markets really start to happen for these different sectors? And so we have seen exits from wave one, right? We've seen Souk get acquired. We've seen MAGNiTT get acquired, Talabat get acquired, Kareem get acquired. So we know that wave one businesses have exits and liquidity. What the whole question is now is, do these wave two businesses have it, right? For the best ed techs and health techs and things. And my view is that's still in the future, right? It's still to come. It hasn't really happened yet for the MENA region. We've started to see it happen in Latin America. You've started to see it happen in Southeast Asia, but you have almost a parallel timeline that's time shifted, 7 to 10 years ahead, which is the exit time frame versus the entry time frame for all this stuff.
And I think that's very important. Again, if we looked at the MENA region, we're beginning to see exits, albeit last year a lot less than previously. And
Yeah.
why do I stress this? I have a piece of paper which I always refer to. I think one of the biggest challenges for the region is that 3,073 investments in the last 5 years, 2,829 companies have received investment, and only 214 exits. That means that if you just take the crude maths, less than 7.5% of those companies have actually potentially exited, which means that from the investor side of things, only so many of them have actually seen returns on those portfolios. Now, naturally, patience is required in venture, and you need a cycle of 7 to 8 years for that to come to fruition. But my point being, and I think sometimes people forget that, and I'd love to hear from you, venture is not charity. There needs to be a return. And if you get return, you invest more. In the absence of that, you're challenged to continue to invest in that space. So with that wave one and wave two, I guess it's ultimately, especially in MENA right now, compared to a Southeast Asia where many VC funds have multiple funds, or in LATAM maybe similarly, we're still waiting for that return to come to start seeing investment outside of the wave one and wave two technologies.
True. Although I think one important thing to think about, again, with the kind of timelines, your math is correct, but it's a little bit misleading, because really we're only in the potential harvest or the potential exit window for investments that were made, let's say at least 5, but probably more realistically like 7 or more years ago, right? So to do the math better, you have to go back 7+ years and say, how many investments were being made back then, and how many of those have exited, right? And that's actually a better yield on, is there liquidity in these markets? Take our own fund, right? You quoted some of the numbers, but Endeavor Catalyst is a global fund. We've now made 300 investments all over the world. But that's because today, the last few years, we've been making 30, 40, 50 investments a year. If you go back to 12 years ago when we started, in the entire first year, we made 5, right? And the second year, we made 10. And the third year, we made 9. And so those are the opportunities that we did back in 2012 and 13 and 14 and 15. That's where we can actually be exiting those things now, right? And so, you mentioned we've had 24 exits and 12 IPOs. That's actually incredibly successful on those early investments. That first fund we did is like an 8.5x DPI fund, right? Like money back to investors. But it's off of a small base, right? There weren't very many investments made in that era. And so you could do the same math for us and say, oh, only 24 exits out of 300 investments. Well, yeah, but 150 of those investments have been in the last 3 years, and so we're not even close to the point where we want to be exiting them.
And I think that's kind of part of the point that I'm making is we can't expect this huge flurry of investment into sectors that are outside of the ones that are slightly traditional until those exits happen, and then the risk appetite
Yeah.
returns. Or am I missing something here? I
No,
mean,
no. Look, categories of investors, right? You do have true believers, kind of pioneers who go into markets when the exit market is not proven yet, right? You're making a bet on the future of, hey, if we back things and build great companies here, there will be liquidity in the future. Once that first kind of bigger liquidity cycle happens and people see it, then a whole bunch more capital comes to the market, right? And, Latin America is a good one to study here, where you've seen bigger companies like Nubank, go public in the United States. You've actually now had 6 or 7 businesses go public. You have Mercado Libre from the region, which has been public for a long time. It's almost a 80-90 billion dollar market cap business, right? So capital that says, hey, is liquidity possible, can look at that region and say, okay, yeah, we've actually seen a track record of it, where I think that's still to come for some of these other venture markets. It's a big question mark of, can we take businesses from Egypt, Pakistan, Nigeria, et cetera, public in the United States? Maybe not. Maybe they need to go public in London or Saudi or the UAE, right? Or Singapore, some of these alternate markets that we need to think about over the next 3, 5, 10 years.
look, I guess the reason I'm asking the question is because we need to backward engineer how we're going to see more investment coming from the emerging market space. Ultimately, I think we're still quite nascent in that journey, and then we come on to the point of the subject today. If you go back, I've been doing MAGNiTT 7 years now. If you go back maybe 10 years ago, many founders were looking to build companies for a country. Then I remember during the time of Souk and Kareem and having joined many events, and this was in the 1819s prior to COVID, everything was to become the leader in a continent. So it was like the MENA of X or the Africa of etc. What we've seen in the last 2 years in a slightly more illiquid venture market is that companies have had to start cherry picking and actually looking for new sources of growth. And we go back to the whole point of the exit is if you want to get to IPO, if you want to get to exit, if you want to get a return on that investment, you need to get to a certain scale and become attractive for either an acquirer or for IPOs. And I guess the question becomes, in this currently challenging economic environment, do founders start thinking differently instead of trying to go into Lebanon, Jordan, Egypt, Tunisia, Morocco, Kuwait, Oman, and go, hey, well, there's Southeast Asia with Indonesia and Singapore, but it's been currently untapped. There's Eastern Europe that could be interesting. What's the opportunity right now that founders should be looking at to break down some of those silos?
Yeah, 2 parts of that question that I think are interesting to talk about. One is sort of where the venture market has moved around over time and how it's influenced this kind of ongoing dance between founders and investors around, what are you pitching, right? Oh, I'm pitching the market leader in a single geo, or now I'm going to be the leader of a region or a continent, et cetera. Some of that has to do with cost of capital and availability of capital, and this kind of pendulum between growth and profitability that, honestly, if you zoom out over enough decades, constantly sort of swings back and forth, right? And, when we were on the upswing of growth that eventually culminated in 2021 sort of growth at all costs thing, the idea was you had to pitch a bigger and bigger TAM to investors. And so it got bigger and bigger of like, we're going to be the leader for this, right? And that was a little bit of that based on the supply and demand of capital in the markets. Now, of course, we've kind of rotated very far in the other direction. A lot of the conversations about profitability, even frankly, like inappropriately so, sometimes, where you have angel investors and seed investors saying like, how are you going to be profitable? And you're like, wait, we aren't going to be yet, right? We have to build the company and the product first.
Yeah.
But I think there are some real elements we can talk more about that, of that kind of part of your question. But the other part that's exciting to me, and hopefully to the folks listening here, because this is kind of the root of how we got started on this topic, is if you're building something for Egypt and you're thinking about, wow, this really works in the Egyptian market, where else could it work? You have all these natural things of, oh, maybe I should expand to Saudi or to the UAE or whatever. But those are very different markets, right? In fact, if you're successful in Egypt, you should probably be looking at Pakistan or Indonesia or Vietnam or the Philippines, right? Because those markets have a lot more in common with your market. And that's what Endeavor sees continuously all over the world, is these different business models. The markets that have the most in common are often not geographic neighbors, but the business models work very similarly, right? And so you could take examples like the used car marketplace business, right? That's actually not a great business in the United States, right? Like people look at Carvana and say, oh, that wasn't really that great of a company. Well, because in the US, it's a convenience play. In emerging markets, it solves sort of an essential need around trust around this transaction. So you have businesses like Carsum and Caro in Southeast Asia being hugely successful, and Kavak, the leader for Latin America, expanding to Turkey, right? Because it's the market that looks the most like what they've been doing in LATAM. So I think that is a big opportunity for the future, is thinking about expansion across these emerging market regions.
And what would you categorize as to the reasons why it hasn't happened historically as much as one would have anticipated?
Oh, it's not natural and obvious, right? I mean, for years and years, human beings have organized their trust-based network mostly around geographic proximity, right? The people who lived near you and potentially looked like you and spoke the same language as you. We are living in an era now, though, where if you can lay down enough trust, and I think organizations like what you guys are providing with the data and what Endeavor's trying to do with the people and the founders that allow people to work across regions, there's a huge opportunity, right? You just got to get on an airplane and go there and see and build the relationships and meet the people. And then you'll realize, wow, what we've been doing in, Egypt might really work in Indonesia.
Yeah, I always give an anecdote or a story that when I went to Turkey for the first time in 2018, I met a company that was doing something similar to MAGNiTT there, and the founder sent out a tweet and said, "Why don't Turkish startups scale to the MENA region?" Effectively, a tweet to that, and it was a survey, and the survey had, I think, 4 or 5 questions, answers. One was language, second was cost, third was politics, and I think the fourth one, literal translation, was "we have not been shown the way," and something close to 70% of the responses were "we have not been shown the way."
Yeah.
I.e., who is the, and I always remember this when I've been building MAGNiTT. I mean, the inspiration of the likes of Kareem and Souk and speaking to Ronaldo and speaking to the founders, and you have such a powerful network through Endeavor. So much of what you do when you're doing your sessions and your mentorship is explaining to people how other founders have done it. And yet, when we look at cross-geographical silo kind of breakdowns, who are those kind of people that we admire or see that have done it? And actually, when you look to identify them, we're seeing more now, but there aren't that many that you can speak to that have chosen to break down borders. And if they have, they should be the new kind of superstars or rock stars that we admire and speak to understand how that can be developed. So ultimately, who are the first movers in that space that can bring down the barriers to kind of those silos?
Yeah, look, I think it's in the making. But one thing for founders who are listening that, we should be clear about is, one of the reasons we haven't seen more of it is that in a bunch of these regions, the local opportunity is very, very big, right? And so you're doing mentoring sessions with founders in Indonesia, and they say, oh, should I be expanding to Vietnam or to the Middle East or to Africa? You're like, actually, no, you've got 5 more years of building this in Indonesia with tremendous growth potential, right? So it's worth acknowledging. I think we're in some of the fastest growing regions and markets. The opportunities locally are huge. And oftentimes for companies that get a lead and are able to raise some capital and attract some really great talent, they then have a lot of adjacencies and horizontal opportunities to expand within their home geography that takes their time, focus, priority, and attention. Even like we talked about Nubank in Latin America, they were only in Brazil for a very long time, right, before finally expanding to Mexico. And so I think that's one reason. But Philip, we can talk about it. I think there are examples of this happening. You guys covered at MAGNiTT, I think, a dozen or so Southeast Asia businesses, Tunes, and others that have already come and established in MENA. The guys at Golden Gate Ventures, which I think is one of the best Southeast Asia venture funds, has set up an office in MENA, and I think for the second year in a row, they're bringing this like a dozen of their portfolio companies to the region to have like a summit. So the ones to show us the way, like, are doing it.
Yeah,
right? It's happened, although
absolutely.
numbers it's still small.
So I'll ask the team if they can share. We shared an article, several of them, market maps of investors from Southeast Asia investing in the MENA region, and we called an article called Trailblazers, where Southeast Asian startups are operating in both. And to your point, we are seeing it happen more and more, and it's something that I'm particularly passionate about. We keep sharing content and data on that because I think the opportunity exists. Just to also touch on exactly the point that you were making, rather than just focus on the founder side, one challenge that I identified when speaking to Southeast Asian investors or even MENA investors, and you can speak to this more than I, they'll often say it's not within our mandate to invest in another region. And it's almost like the sovereign entities here in the region are somewhat disrupting that because they're now attracting all of these VCs, but saying you need to deploy some of that locally. I don't know how much of that works in the opposite direction, but can you speak to the investor mandate? Because to invest like you is relatively unique. You've taken a thesis and you're looking to invest across all of the emerging markets. I mean, I don't know how many VCs are operating in that level, but when you speak to local investors here or local investors in Southeast Asia, for the case of example, they'll say, well, our mandate from our LPs are to invest in our local regions. Does that need to begin to get disrupted?
Yeah, look, and I think that's actually a good point to focus on. Most of the funds, if you go to Singapore and you talk to the dozen most active, best venture funds, most of them have a geographic mandate, right? And you even have this question of like, well, does it include Bangladesh or does it include Pakistan, or like how far, kind of west can you go in what you guys have been doing? All that means is they've made a deal with their LPs for their current fund that they're going to focus within a certain scope of geography. Pretty much every venture fund, though, every LPA has a carve out for 10, 15, 20% that says we can also break the rules and do whatever we want, right? And actually, good historical example, Silicon Valley funds have the same thing, right? Most of their LPAs say, hey, we're going to be focused on the US, or now the US and Europe, or it's like a pretty focused thing. The time in history when every fund in Silicon Valley started to break that or go to their LPs and say, hey, we're going to be above 15% US on this, was the beginning of venture capital in China, right? And every single fund was going to China and making investments. And then it turned out in their next fund, they had to ask for up to 30% that could be non-US. And then by a few years after that, they were raising a China-only fund, right? And so when you go to Singapore and the fund managers say, no, our mandate is for Southeast Asia, they're telling the truth. The point is, once the opportunity becomes big enough and obvious enough that the rest of South Asia, the Middle East, and Africa are a huge opportunity, they'll start to make more investments. They'll bump up against that 10, 20% carve out in their current fund, and they'll realize, hey, we should be doing more. And the next time we raise a fund, we should be more focused on this region. The pioneers or the trailblazers are the ones like the Golden Gate Ventures guys who are already going like, hey, we're going to raise a dedicated fund, right, for MENA and open an office, right? And that they're a little bit ahead, I guess, of the others.
Do you have any tactical advice for any of the VCs? So I'll lead that by one that I give them, is that sometimes many of them are coming to the region to raise funds, and I'd ask them explicitly, are you looking to invest in the MENA region? They said, no, our mandate is to invest in Southeast Asia. And I was like, well, you're going to the region, you better learn something about the region. And one piece of advice I gave is that there's two tactical ways of doing it. You either give some kind of commitment that you will invest in your companies in Southeast Asia to expand to the Middle East as a point of case, and or create a carve out, as you mentioned, to invest in, if you want to hedge yourself, similar companies in the Middle East to what already exists in your portfolio. And through that educational process, you could potentially introduce the two together. They both become successful. Some kind of M&A happens down the road. But by identifying some tactical opportunities of either fueling expansion into a geography and or investing in a similar company in another market and using and leveraging the experience that you have to merge the two together, you're offsetting some of the risks into that new geography. Does that resonate with you? And do you have any other kind of pieces of advice for venture investors that may be interested into new markets that are looking to raise from a different geography?
Yeah. Look, I think a lot about this because in addition to my day job with Endeavor running our fund, I sit on the board of the Kauffman Fellows, which is all about venture capital education, right? It's sort of like an executive MBA in venture. And you work with a lot of emerging managers in funds 2 and 3, and even more established funds 4, 5, 6, around portfolio construction and kind of thinking about how their strategy evolves to continue to have an edge. And I do believe for emerging market investors, the cross-pollination, right? Or what was our title here? Breaking down the silos, right? Like breaking down these regional silos and getting better flow between can be a competitive edge and a competitive advantage for GPs and fund managers because they'll see the business models, right? In a different and productive way. I think you have good examples, a couple, again, sort of isolated. There aren't tons of them yet. But if you think about, GV, who came from Sequoia, India, right? Peak 15, and now he's in Dubai investing in the region. And we've been lucky enough to make a few co-investments with him. Obviously, all the things he knows from his experience in India are hugely helpful here in the region or in the Middle East, right? So I think it's a really kind of critical point that it can be a competitive advantage. I do want to acknowledge, though, and say it's also okay for people to come and raise money from LPs in different parts of the world without changing their own strategy, right? So some funds, are going to be a Nigeria-only fund. Great. They can have LPs in the Gulf or in Saudi or in Asia. And it's actually probably smart from a global diversification play for those really big pools of capital to be allocated to fund managers who run country-specific strategies for all those countries, and to be allocated to some of the managers who are taking advantage of this kind of cross-market opportunity, right? So I think both, there's room for both of those in the market.
Conscious that there's also a role that government can play in this. I mean, historically, naturally, a lot of government are somewhat insular in supporting their geography, your country.
Yeah.
And we're talking about breaking down silos across continents, and in some cases, like continents are just geographical borders. They're not necessarily. It's not like the US, China, India. I mean, they're clear mass scale markets, and yet when we're talking about LATAM, Southeast Asia, the Middle East, I'm pretty sure you could categorize that the same challenges exist. And if you speak to most founders, they'll tell you talent, scalability, and then maybe they'll come to funding. But actually, it's not the funding that's always the first challenge. It's getting the talent and then scaling into a large enough market. What role can governments play in not only supporting the startups in their continent, but like cross-continent breakdown of some of those silos? Or is it not the role of the government to support from that perspective?
That's a good question. I mean, you're going to get very differing opinions, I guess, on that topic. One slight tweak I'd make to your framing, because Endeavor, we work with thousands and thousands of founders at the earlier stages in our kind of selection pipeline in all of these markets. Only a very small number actually get selected to become Endeavor entrepreneurs. But we have a lot of data on what are the biggest challenges for founders. And yes, access to talent, access to markets, access to real sort of knowledge and know-how around scaling companies. But I would articulate access to smart capital, like smart connected capital that comes with know-how and knowledge and expertise in company building is still a real challenge in many of these more frontier geographies. I always say, like, there is money there, right? But there isn't money that comes with the knowledge and expertise of how to build and scale businesses. And that's where I think governments through different, whether it's sovereign wealth funds or other initiatives or ecosystem building pools, I think are very smart to do this sort of fund-to-fund strategy of saying, hey, we're not going to try to be the smart capital, but we're going to back a bunch of international and regional investors to come and be active here through the power of our LP dollars, right? I think SVC has done that very well in Saudi. I think the guys in Abu Dhabi and Dubai have been working on this. You just saw a big announcement this week, I think, from the Qataris. They want to essentially do the same thing, right? They announced $1 billion to back managers. That's a smart strategy, I think, for them to do, because it will get the knowledge and the know-how and the expertise of the smart capital to actually get into their market in their region and incentivize it in kind of the right way.
And is there anything that you saw from LATAM, which I'm not familiar with at all, from a government initiative perspective that could be learned from or applied here locally? Or, as I have been told by other people, LATAM is very much just an extension of the US, and that's such a strong relationship, US-LATAM, in terms of the venture corridor, that it's not necessarily the same as building out this kind of concept and ecosystem in Africa or the Middle East.
Yeah, it's fair. I mean, LATAM certainly has more synergy and more connectivity to the US, just naturally within Endeavor, when we're coaching and mentoring founders on raising kind of Series B or C stage capital. Generally speaking, LATAM companies can come to New York and Miami and San Francisco, or if we're doing the exact same thing for a company in Africa, we're talking about investors in London and Dubai and Riyadh, right? And so I think there are sort of natural corridors there. From a government initiative perspective, a number of years back, the government of Chile actually ran a program called Startup Chile that actually turned out to be a very good marketing campaign. Like, they didn't mean it as such, but they did end up elevating the brand of Chile in the founder community in a very effective way. There have been initiatives in Mexico and Brazil and other markets on trying to incentivize the formation of fund formation and GP capital. But, Philip, maybe I'd turn it back to you to see if you guys see anything in the data at MAGNiTT of what governments are doing particularly well. I think one of the most effective things we see at Endeavor is that, governments who just create business-friendly environments to make it easy for people to hire people and do business and start businesses and close businesses, right, and declare bankruptcy and raise capital, creating kind of the conditions for the private sector to thrive without actually trying to drive any particular incentives is probably the healthiest, simplest thing that many of these governments can do. But I don't know, have you guys seen anything in the work that you've done?
I don't know that you can see it necessarily in the data, but I can speak to it anecdotally. I think obviously different governments, depending on their geographies and the size of their economies, need to somehow play to their strengths and acknowledges some of their weaknesses. And I'll come on to that in a second. One thing that I wanted to ask you about that, and I'll pose the question and then answer your question, is what do some geographies need to focus on now? Because there was a time where everyone wanted to be a startup hub, or does that model need to somehow change and look to specialize into certain areas? Things that I have seen or heard work, and I always remember being at a council meeting here in the UAE, and I was asked this question by a government official, and I will respond what somebody else said that was extremely effective. And he's a founder of a very successful startup here, but I won't mention his name. He said, why is it that governments don't take more time to pick the winners and then go on a trade delegation visit to other geographies? I.e., why isn't there more hand-holding to leverage the economic geopolitical relationships that they have? So, point in case, if you're in the UAE and you want to go to Singapore, pick 20 or 30 of the top funded companies or 20 of the companies that you believe are strong in fintech and take a trade delegation visit to Singapore to go and meet your equivalent counterparts there under the guise of a foreign visit or economic trade visit. Now, I understand Saudi Arabia actually, MCIT and His Excellency Swaha is doing a lot of that. He's been going to Silicon Valley and did trade visits there. He went to Korea, he's been to Singapore. That's something that I think is not involving creating a fund, breaking down barriers, talking about some of the things that we've mentioned here, and vice versa, almost creating landing packs, information packs, and clear, what would you call it, but propositions for companies looking to set up in your jurisdiction as to the playbook of how to set up in Dubai, how to set up in Saudi Arabia, how to set up in Egypt, to break down exactly what the purpose of this conversation is, some of the silos and barriers to entry into those markets. And I think that without needing to go into incentives and things, breaking down the information barriers is one way, as well as promoting the success stories is another way of building out some of those relationships without it needing to be specific funding or incentives.
Yeah, super good point. I mean, look, a big part of this is role models and success stories and showing that it can work and it has worked. And it's a very long-term game in that regard, right? You have to sort of repeat yourself over and over and tell the same story over and over for the international community to know more about what's happening in a given region. And governments have a great platform for doing that. The best thing they could do would be to do it together, right? So you'd get, there's a bit of this in Southeast Asia where you have organizations like ASEAN, et cetera, where they're not only trying to tell the story of Singapore or Indonesia, but they're telling the story of the region to the world. I think the Middle East could do more of that, of trying to raise the profile, not of a single country, but of the region as a whole, let's say in Silicon Valley or in London or in some of these other venture communities.
And to that point, I want to go back to the question I was going to ask you. Do certain geographies need to acknowledge that they may have to change their approach? What do I mean by that? And I say this politely, but here in the region, you're seeing the UAE and Saudi Arabia becoming the two leading hubs. Egypt has historically been one of those players. And we often get asked, what role can smaller GCC geographies play in this space? You've just made the point about the QIA and the $1 billion investment fund. Do they have to take different approaches to building their ecosystems? Again, learning from LATAM, is there anything that can be learned from some of those geographies where they can specialize in a sector or become a back office hub as opposed to a commercial hub? Is there any advice that you've seen from other emerging markets that geographies can continue to play an active role, acknowledging their size?
Yeah, it's a very smart question. And I think the short answer is maybe, right? If you try to think about how to be creative around this. I think to that, doubling down on that same point of, I don't know the details of what the Qataris just announced, right? Or how they intend to invest $1 billion. But if they were to incentivize folks to come invest not just in Qatar, or just in Doha, right? But in the region as a whole, that would actually be very powerful, right? If they could structure it in that way, or incentivize, managers to come so that, they would literally view and celebrate as a success and a win, investments in an Omani startup, right? Or a Bahraini startup, or, I think it's something we've even been in kind of talking about internally at Endeavor. We have kind of individual offices in Saudi and the UAE, as well as in Jordan and Lebanon and Egypt and Morocco, Tunisia, Turkey, Pakistan, et cetera. But we've talked about well, what about the other geographies we don't have an office yet? Is there any kind of regionally collaborative way to work with them together, right? Because from a pure population perspective, does it make sense to open an Endeavor only in Bahrain? No, actually, it's not a big enough geography for us. But maybe there's a way we could work with the rest of the GCC or the rest of the region. So it's something to think about for sure, in terms of what could be possible.
I'm going to ask a question, and somewhere I think it's somewhat controversial, but I'm interested in the vanity.
I was waiting for the controversy.
The controversy. Yeah. So this is we're a feeder to this issue, and how do I frame the question? In the US, do you have cross-state competition of who's the most funded and who's the most active, in the same way as we see across emerging markets where certain countries want to be leading, or does it not really matter? Is that part of that? Yeah. We talk about the 10-year, 20-year, 30-year, 40-year journey. Is this as you're developing the ecosystem? Because just to put the point, in the end, you're going to have to be in all of these geographies. Scale is the name of the game. And in the US, you just need to operate in the US. Do you have that level of competition that Austin is competing with New York and New York is competing with Silicon Valley? Or is it really at a point where each one just understands its strengths, weaknesses, and then kind of develops? And is that something that we can learn from a collaboration at a regional level?
It's a great point, right? And in some ways, it's kind of a historical accident. If you look at the last 200 years and kind of formation of the modern nation state and how this all played out, that the US is a very big geography, but only one country, right? And so is India, and so is China. And you could have, if you go back in time, maybe had something more like that in your part of the world. But it's an interesting thing to think about, because is there interstate competition in the US? Yeah, of course, right? Like Texas and California compete, and New York, whatever. But there is a realization where people say, hey, wait a second, guys, at the end of the day, we're all the US, right? Like we're all on the same team here. And maybe that's, you know, an advantage of contrast like India to Africa, right? At the end of the day, they're equally sort of diverse in kind of languages and regions and all these things, but India is one country and Africa is 54. And so it's easier then, I guess, for India to kind of together promote their startup ecosystem, their venture ecosystem, like everything they're doing, than it is for 54 African countries to do it. So maybe it's almost a philosophical point, but if folks from the region could realize, if leaders of governments and corporates and things could say, hey, wait, on the world stage, we are still sort of like representatives of our region, I think that could be a really powerful thing. They're like, hey, we might compete against each other, but at the end of the day, rising tide lifts all boats if we get a success story out of our region, right? I think that happened, you know, when you saw, I don't know, Angami go public, and you know they put it on the tower, and Abu Dhabi claims Angami, and Lebanon says, wait, but the guys are from Lebanon. Like the point is, it's a great Middle East success story, right? And it continues to be with what the guys are building as a public business. So yeah, I think there's a little bit of that that, you know, again, is probably sort of just multiple compounding accidents of history of how we're set up the way we are today. I have no assumption that the way we're set up today is the way we're going to be set up forever, right? And so you could absolutely imagine a future world where the 22 different countries of the Middle East are actually better aligned and working together.
Look, I'm conscious of time and I want to leave it up to questions, but I could continue asking many questions around this, and maybe we'll grab a beer at one of the upcoming conferences. Before I close it out, and if people have questions, please share them. Another somewhat controversial, there's an obsession in the region, if not global, and I think it's somewhat shifted with unicorns. Is there something in the business model shift that, and you have 15 of them, if I remember what we mentioned. Is there something that needs to be acknowledged, that there is a different path to exit for emerging markets until the public markets can accept or acknowledge or embrace local startups, or that we've actually seen a track record to IPOs, that actually building to potentially exit is more positive in the short term, as opposed to trying to solve for the unicorn issue in the medium term, shall we say? I don't know if you have a strong view or objective in the emerging versus US, China, India kind of market model.
Yeah, look, it's a very good articulation of a kind of complex problem, which is everybody wants to be measured against the same yardstick and kind of metric of success. And it emerged over the last 6 or 7 years that the idea of building a company that would be valued at $1 billion. Now, to be clear, valued at $1 billion, not necessarily worth $1 billion, but valued at by the market at the time, at the moment with those investors, became kind of this global measuring stick. And yeah, we've made 300 investments and been lucky enough. So far, we have 52 of the companies, so about 1 out of 6 have grown up to be valued at $1 billion. For the ones that have been publicly listed, there's about a dozen of those, or been acquired for $1 billion or more, that's a realized value, right? And so it really is sort of a true value. For many of the others, it's just one kind of marker on their journey of, at this moment, some set of investors said they were worth X. And now they're going to keep growing. And in another moment, they're going to be worth, you know, 2x or 3x or 0.8x, right? Like depending on like where the market values it. So I do think it would be healthier to be a little bit less obsessed with unicorns. I think the term actually might sort of fade away over the next 5 years, right? I think it was a little bit of a fad and a trend. And we might get back to this idea of like, well, what we really want to do is build amazing, lasting companies in all these places that create jobs and create wealth and create role models. And if a business gets acquired for $300 million or $600 million, or let's be kind of
or 50
or 50 or whatever, 998, right? And it's not a unicorn. What an amazing outcome, right? So I think we could be more thoughtful about that. Certainly for the angel and seed stage ecosystem, $50 million exits are awesome, right? And in Endeavor's history, the first company that gets acquired for 50 or 100 or think about Paystack in Nigeria, right? $200 million. What an amazing and important thing for kind of a milestone in the ecosystem and all the early stage investors. As you get to where we started the conversation into years, 10 to 15 to 20 of a venture ecosystem, then of course you want to be playing for larger billion or multi-billion dollar outcomes, because that's how you attract the General Atlantics of the world or the TPGs of the world to come be active in your region and enter companies at $500 million valuations, right? And I think we are going to see more of that, but I guess if we were a little bit less unicorn crazy, that would probably help everybody.
Great. So I'm going to ask you some of the questions. So if you have them, please do share. Priscilla, hi, formerly of Mikey. She says, many regional investors are requiring boots on the ground as part of their mandate, an incorporated entity prior to even having discussions with the startup, and not the promise of setting up in that geography. What do you see funds, governments doing to breaking down that barrier and incentivizing more global companies to bring their tech over?
Yeah, so look, it gets kind of down to incentives, right? So certain pools of capital are trying to incentivize startups to be in their country or city or region. And I think that's an okay thing to do. But as a startup, then you can get kind of distracted chasing the dollars of like, oh, I need an office in Abu Dhabi and one in Bahrain and one in Doha, right? Like, and all of a sudden you're like, wait, I'm a seed stage company. That doesn't actually make any sense. So again, to the point about kind of trying to invest in the broader region, I think if those mandates became a little less strict, that would be helpful. But for the managers who are running them in the current mandate, they're just doing their job, right? Of saying like, hey, I shouldn't actually meet with you until you're here because I won't be able to invest in you. Although that's a little short-sighted. I think if you look at Silicon Valley and the people who've been doing venture for a very long time, it's a relationship business, right? And so you do get to meet companies way before you might actually be able to invest in them in many cases.
Yeah, I mean, I've advocated from my perspective in certain geographies that ultimately, if you invest in the startup and you give them the platform to cost effectively set up in the geography, if it makes economic sense, i.e., you're making enough revenue in that geography, you will naturally just continue to hire and grow that team to a point where it becomes critical mass. It's the forced move that can sometimes be frictional, as opposed to letting the capital markets or the general market economy play its impact on the kind of economics of the company's growth.
100% agree. Set up the right incentives for startups to want to come rather than some way requiring them to come in order to access some equity check,
There's a question. Thank you for the conversation. Would love to hear your opinion about the current situation of liquidity and interest for sustainability and impact projects. Yeah, for MENA and the Middle East, which is quite specific. But I think I'm going to go back to what I was saying earlier. Wave one, wave two, you didn't quite, although you mentioned it, the payment gateways. I think financial services is the industry that's being disrupted at large. What is it that will need to happen to catalyze more investment potentially in sustainability impact-based projects in the emerging markets? Or what is your view, as the question is, on the current situation of liquidity and interest in that sector?
Yeah, I guess I have a global view on impact investing in terms of it being double or triple bottom line, in that it is tricky, right? It's not a super easy thing to get right. My personal view is that when you're doing financial inclusion, financial services, when you're doing ed tech, health tech, all these things, they have obvious kind of positive benefits for society more broadly, but that the businesses that are built to be really economically successful are the ones that are going to attract the best capital, right? And I think we just need more time doing that in markets like Egypt, for example. We continue to invest pretty heavily in Egypt. We're big fans of it over the very long term, but we need another 5, 7, 10 years before we kind of really see that play out in terms of the realizations of financial services more broadly, right? Not just payments, although there's still quite a bit to do on payments, ed tech, health tech, etc.
Cool. Kareem is asking a question. Do you believe that one of the constraints of cross-border integration and the existence of our regional silos is due to the disproportionate risk capital from international investors versus local funds? Who understands the nuance of local regional challenges better? And if so, how can the ecosystem enable more risk capital from local VCs as opposed to international funds?
It's interesting. My view is that there's still actually that the MENA region and Africa and these places we're talking about are still relatively undercapitalized in terms of international investors being present in the region. So I don't know if I completely agree with the framework for the question. However, I do think that there's very much a kind of stages of financing framework you can use here that most typically seed, pre-seed, angel, even Series A investing tends to be local and regional. And as you get to B and C and later stages, those tend to be international pools of capital. I think that's the way it's played out in many regions. I think it's the way it's playing out in the Middle East. You're going to see, Philip, you guys do a great job reporting on the data that's already public. As one of the most active co-investors, we get to see a lot of the things a few months before that. You're going to see some bigger international, funds investing in MENA in the coming 3-6 months where these deals are going to become public news. And I think it's actually a really good thing, right, to see some of these funds being active on the growth equity side for the first time in markets like Saudi and Egypt and the UAE.
Agreed. And there was on the podcast with Lulu, Ali Habib said something which I've been repeating now, is that we have a superpower here in the Middle East, which is that we can predict what happens in the future by looking at what happens in the US. And he was making the point that trends-based analysis highlights that whatever's happening in the US or Europe can actually be happening here. And so in any of the reporting that I do, and I have a couple of slides, it's the US liquidity boom ended at the end of 2021. The liquidity boom here happened 6 to 9 months later, and then the pattern declined. With that, is there anything you are seeing coming from Silicon Valley in the US or Europe that we can anticipate to begin happening in the emerging market space in the foreseeable future that we may not necessarily be aware of?
Yeah, I think when it comes to capital flows and liquidity and things you're describing, studying and watching the US is useful, right, for all regions of the world. I think, and I'll come back to that, when it comes to business models, increasingly, I actually think studying China and India and seeing the businesses being built there can get to Ellie's same comment, right, of like looking into the future. Like, I was part of helping to set up, and I'm a partner at a pre-seed and seed stage fund called Alter, where the entire thesis is study India, right? Study all the businesses being built, and then go invest in those businesses with great founders in Southeast Asia, in Indonesia, in Egypt, in Nigeria, et cetera, right? And so I do think there's looking into the future, or kind of using that time machine hack can be done in multiple ways. But specific to your question about what's happening in the US, I do think you're starting to see kind of more capital get off the sidelines, right, and get active, being deployed and invested in the US. We see that in our own data for Endeavor, right? We now have 4 quarters in a row of doing more investing, right, coming off of the lowest point. That continues to kind of go up. And we're investing in the Middle East, we're investing in Southeast Asia, we're investing in, all of our markets basically are back open, where there was a moment where almost everything was paused, right, or sort of shut. And I think, to the much speculation around exits and liquidity, this means you'll see more M&A this year. We're actually seeing a lot of Endeavor companies raise rounds of capital, oftentimes with their kind of existing investors who want to give them more money in the ones that are really working to go do M&A and acquire some of these smaller companies in this environment. So we're not actually thinking we're going to exit that many companies through M&A this year, but we think we're probably going to acquire a lot of smaller businesses if you look at our portfolio. And then, the big multi-billion dollar question is what's going to happen to the IPO market. And, I do think the US IPO market will be kind of really, truly more open probably next year, right? 2025. Some people are predicting second half of this year. I think for international companies, thinking about it, planning for it for 2025 is real. We have probably a dozen businesses in Latin America that are ready to be US listed businesses that will go public in 25 and 26 when that happens. And the big question is, can Flutterwave do the same thing from Nigeria, right? Or can Katopi do it from the UAE? And can we get some of these other businesses out of other geographies to be publicly listed? There's a whole separate topic on going public in Saudi or Singapore or Hong Kong or some of these other geographies that
It's a
we
whole
don't have
nother podcast.
time for today. But I think it's a really rich and interesting area we're doing a lot of work on right now.
Well, look, I don't want to take up any more of your time. Thank you very much. That's the full hour used. And I really appreciate it. This is something that clearly you're passionate about, something I'm very passionate about. We're trying to put as much data out there as possible about the cross-pollination. I know we focus a lot on Southeast Asia and MENA, but there's obviously MENA and Africa. There's even the opportunities of Eastern Europe into these parts of the world, and even the point that you've just said, the acquisition of international players into these markets to get market access. So hopefully going into 2024 and positioning ourselves into a much stronger position going into 25 and 26, we see that next wave of venture capital evolution and startup development in the emerging market space. So leaves me to thank you for your time, and hope to see you likely at Leap next week.
I won't actually be there, believe it or not.
Okay,
However, it was great to be here today, and I have a good reason to not be there, which is we've hired an amazing head for our Endeavor Catalyst Fund for the MENA region.
Yes,
Yana Durrani, who's based in Dubai, so she will be there.
Great.
Actually, Philip, it's a great point. We run a global fund from Silicon Valley and New York. That's where most of our team has been historically. My last hires in terms of folks joining our fund over the last 2 years, Singapore, Sao Paulo, Dubai, right? And the next one is going to be based in Nairobi. So this is clearly where the world is going. And I think for folks listening, there's a lot more to do.
Well, thank you very much, and we'll continue to do this. Maybe we'll do it again in a year and see how it will develop.
That'd be fun. I'd be game. So thanks for the invite.
Thank you. Thank you very much for everyone listening, and stay in touch.
Cheers.